Hey everybody, Rob Maurer here, and today we're going to talk a little bit about Tesla stock the day after the S&P 500 inclusion announcement. We have an update on Elon Musk's COVID-19 status, the production rate out of Gigafactory Shanghai, mass hiring by Tesla, and a couple other topics as well. Alright, so Tesla stock on the day today finishing up 8.2% to close at $441.61. That compared to the Nasdaq down 0.2%, so obviously a strong day for Tesla on the back of the S&P 500 inclusion news, but probably not as strong as many people were hoping for, considering after hours trading yesterday in the $460 range and the open today at $460 per share, so it fell about 5% over the course of the day. Probably not the outcome that I would have guessed, but I think when you have a lot of people expecting a sudden increase, well, the market has a way of disappointing you. That 8% gain is nice, but really it's just back to where the stock was trading a couple weeks ago. This is right around the level that Tesla did their most recent capital raise of around $5 billion at. But what I think is also interesting here is not just the share price, but also the volume. There were only about 60 million shares of Tesla stock traded today. And over the last year, that's only the 126th highest volume day. That's out of 253 trading days. So basically today just fell right in the middle of the pack from a volume perspective. Although volume has been relatively low recently, over the last month, the average volume has only been about 30 million shares. So this is about twice what we've seen over the last month on average. And we do have to go all the way back to October 2nd, which was actually the day that Tesla released the Q3 delivery numbers to get a higher volume day. But if we keep looking back, we see a lot of other high volume days as well. And if we look at the 3-month average, it's basically right there at 59 million. And the 12-month average is actually even higher than today at about 66 million shares. The point here being that, as we talked about yesterday, we know the S&P tracking funds need to buy a little over 115 million shares. And this process is going to take a while to play out. I mean, even if all 60 million of those shares today had been purchased by tracking funds and no one else did any sort of trading at all, which is obviously completely not even close to being the case, it would take at least a couple of days for all these funds to buy up the required amount of shares. And that's just for the tracking funds before considering the other, 170 million or so that may need to be purchased by benchmarked funds. So basically my perspective is we kind of just need to wait and see what happens. There's going to be a lot of weird stuff that happens over the next 5 weeks. There's going to be people positioning themselves with stock or options to help satisfy the demand for those shares on December 14th and December 21st for these tracking funds. Some people may have already been doing that from Q2. There's going to be speculators jumping in, traders jumping in. It's all going to be weird and no one's going to know exactly how this is going to go down, including the S&P committee, as evidenced by them soliciting feedback from investors on how to best handle this process. My understanding from further conversations today with people that know a little bit more on the process than I do is that the committee seeking feedback is not necessarily unusual, but it does sound like the tranche process is. So anyway, on the volume, relatively low, and I wouldn't expect the funds to actually start buying yet. Maybe they are starting to line up how they're going to buy, and as I've talked about in the past, they have flexibility on when they can do it. It doesn't need to be the exact day of inclusion that they're doing this buying, but I do still expect most of that to occur around the inclusion date or dates. And then I think the big question is, okay, how much of that trade has been front run already with people holding stock just to trade it off to the institutions or the funds that need to buy? The other question that I want to quickly follow up on here is short interest. So we haven't really talked a whole lot about that. And the reason for that is because it's become small enough where I don't think it's all that important anymore. I mean, there were times in the past where short interest was 25% of the outstanding share count and a higher percentage of the float, but these days it's much lower. Our most recent report was from October 30th. Short interest was around 48 million shares. That's only about 5% of the outstanding share count, 6% of the float. So maybe that comes down a little bit with S&P 500 inclusion, maybe to 4% or 3%. But I don't think it's high enough where we're going to see some huge short squeeze in addition to the pressure from the S&P inclusion. Some of that short interest is just never going to go away. It's there as a hedge for other positions on the stock. All right, so I think that's everything I have to say for right now on the S&P stuff. Let's move on to a quick update here from Elon on his COVID status. Remember last week he received both positive and negative results from the rapid antigen test, so he was waiting for the PCR test to come back. So on Twitter today, Elon did confirm the results of those tests, saying, quote, "Yeah, PCR CT was unequivocal at less than 20. Doesn't matter what method you use at that low a cycle threshold," end quote. So if you're not familiar with what that means, PCR is polymerase chain reaction. That's the type of test. It uses amplification, basically taking a really small amount of DNA, copying it over and over with a different number of cycles until the virus can be detected. If the virus is more prevalent, it's more likely to occur in a fewer number of cycles, and it looks like most SARS-CoV-2 tests are deemed negative after somewhere between 37 and 40 cycles. So that's the cycle threshold, or the CT, that Elon is referring to here, and he was saying it was detected for multiple tests for him in fewer than 20. So that's giving him much more confidence that yes, this is actually a positive test. He does have COVID-19, but he did give us a couple of updates on how he's feeling, saying yesterday that he really doesn't have any symptoms for the past few days apart from fatigue, and that today he's feeling pretty close to 100% if he takes Dayquil. So all the best wishes to Elon on his continuing recovery, but thankfully doesn't sound like too serious of a case. All right, next up here, I want to revisit a story that we had talked about, I think last week, on the potential production rate from Shanghai for the Model 3. Based on the CPCA report of October production being about 23,000 Model 3s from Shanghai, that was a weekly production rate just shy of 5,200 per week. Shortly thereafter, we heard a report from Tasmanian and from others that Tesla may actually be hitting 5,700 per week. So as a follow-up to that story, Tesla owner Silicon Valley actually tweeted on Monday, quote, "Giga Shanghai has reached 5,700 Model 3s per week, and here is the production line," tagging Elon Musk in that tweet, which Elon actually then ended up liking on Twitter. So I would take that as pretty reasonably solid confirmation that Tesla has actually reached that rate. Now, as we have learned in the past, if you followed Tesla through any of the ramp-ups for the Model 3 or the Model X, that doesn't necessarily mean that'll be sustained for the entire month or for the rest of the quarter. And for my forecast, I'm still going to stay at my roughly 5,300 estimate for November, 5,500 per week estimate for December. But I am still encouraged to see this, and it does give me more confidence in my forecast there for Shanghai. But of course, either way, we will revisit once we get November production numbers sometime in early December. On the topic of Q4 here, we have a report from Electrek that Tesla has done some pretty significant hiring to gear up for quarter end. Electrek writes, quote, "Sources familiar with the matter told Electrek that Tesla went on a hiring spree and hired about 1,000 new people in sales and delivery positions across North America in just 2 months," end quote. So a good sign, I think, for Q4, but obviously we all expect a pretty significant increase sequentially. Tough to take too much away from this, but I do think it's interesting that Electrek did note that a decent chunk of these new hires are part-time. I think there could be a bit of a seasonality aspect to that. Q4 in general in the automotive market is stronger, and especially with such a big jump here from Q2 to Q3 to Q4, Tesla might just need to temporarily throw people at the problem of handling that sales process and getting all those cars delivered, while over time they continue to hope to make that more operationally efficient. All right, last few things here. These all have to do with sort of emissions and emission standards. We heard today from UK's Prime Minister Boris Johnson that the UK will be moving up their ban on the sale of new gas and diesel vehicles from what had originally started at 2040, then moved to 2035, now all the way up to 2030. This news comes as we also have reports that the EU Commission is seeking overall stricter emissions requirements for the whole of the EU, and under what is being discussed, Build.de reports that this would basically change the emission requirements to be lowered or to become more strict to roughly a third of the value that they were previously planned to be. So the EU Commission stuff, that is still in the discussion phase, but with the move by the UK, this discussion with the EU, again, the trend is clear. Emissions requirements are going to continue to become stricter, and the regulatory outlook for the internal combustion engine is extremely poor. Lastly today, Tesla's just got a bit cheaper in California. There is now a $1,500 clean fuel reward, which is available for all California residents. That goes on top of other state and federal incentives, though it looks like it may be a little bit in conflict with some utility-based rebates. So your mileage may vary, but a nice little incentive there, and that does apply for purchases and for leases. All right, that'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Wednesday, November 18th episode of Tesla Daily. Thank you.